Hello, 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 everyone. Good morning. Happy Friday. Happy Friday to you, Patrick. Thank you, Patrick. First in. Hey, Sterling. Because you're in my feed. I'm going to click on it the way it's in my feed. I'm sure this is not the way you put it in. I don't know why it messes up. So you have Copart, which was a beat, which from last night. I'm like, okay. Then he says no interesting earnings today. Then we got McRanger saying good morning, but then Sterling has two earnings of interest from last night. Now, I don't know why it's in my feed. I'm not looking at the YouTube feed. I'm looking at the feed through Ecamm. I don't know why it's. I'm sure you did not put those out of order because then you also have further down Gap earning, which was a big beat and up around 20%. So I'm confused. I never realized things could get out of order like that. So if you see me putting things up out of order and it's different from the YouTube feed because I can't run, I guess I could run it on another computer or monitor, but I don't feel like doing that. If things are out of order, then that's why. I'm assuming you put them in order. All right. Good morning, Sterling. Thank you for putting in the things. Jaguar, I love this. The Jaguar, the brand rebranding. I don't care what it is. I don't care if you want to label it as woke or whatever. It's just, how is that going to help you sell a car? And if you haven't seen it yet, just do a search. Just do a search. Uh, if you want to, this is part from the ad, okay? This is not going to help you sell a car. I'm sorry. If that's going to help you sell a car, you're not going to remain in business as a car company very long. Because you know what? In my car ads, I would like to actually see a car instead of that. Because I don't know what that is. I don't know if it's even woke. It's just a mess. Okay, can we just, it's like if I want to order a pizza, I want to see the pizza in the ad. Okay? I don't want to see a lot of other stuff. I want the pizza. I want the car. Come on. Come on. Let me know your thoughts. Good morning, Jacob. Ross Stores was a miss on revenue, which is more important than EPS, and it's up 10%. How do we do it? Apple EU closes investigation in Apple's App Store audiobook practice with their complaint withdrew. Well, that's good for Apple. Good morning, Anissa. How are you doing? What's our thoughts on Palantir? I have long 785 position, risk strong backside, or still room to move higher. I covered that yesterday. We can look at it again today. You're first on yours. Well, you're always first, McRangers. You're first today, no matter what. Good morning. Order seems logical on your end, so it must be the way it's showing up on my feed. Good morning, John. Hello, Charles. Jaguar Land Rover has a trash product anyways. Yeah, and look at what Stellantis has done to Jeep. I know. It was hard to ruin the Jeep brand, wasn't it? It was hard to ruin the Jeep brand. What else? No, I didn't know that. Jaguar has the highest days of supply on ground globally. Well, that ad is not going to help them sell it. That ad is not going to help them sell it. Good morning, Ted. Good morning, Royal Palms. Good morning, Richard. You must do better on calling. You said, oh, sorry, I did. Well, you know I'm not trying to call an exact level. I'm trying to say where I'm watching stuff. That's where and if I say 513 is 514 on something that's trading at 20K, it's in that area I'm watching for things. Remember that. So it's a bit scattered. Okay. Well, I can call it Palantir again. For me, it's trailing mode. I came in late. What's your sentiment on day and going into next week? Again, we could have some more minor upside, and we still didn't close above the 62.5 yesterday. We're messing with it on the S&P. We have cycles going back up, and remember, I want to talk to the number releasing people, because releasing PCE on the day before Thanksgiving is just evil. It's just evil. 2 years supply. Wow. Wow. That Jaguar ad doesn't even show the car. That's what I'm saying. We don't even have strangely attired people and the car in the background or the foreground or anywhere in the ad. We just have strangely attired people. You could make that an ad for anything, and it would ruin the product. I mean, if you could have, like, you know, now Domino's Pizza is not a great pizza, and I can say I worked there. I managed a Domino's Pizza in college. But, you know, if you made, Domino's okay in a pinch, okay if you need just something to eat. But if you made that the ad for Domino's Pizza, literally, Domino's Pizza sales would probably fall off a ledge. It'd be people like, what? What is this? I don't want to see that. Yeah, gold is rather shocking. Other metals, it's all been rushing into gold again. They got rid of them all. Nobody drives them in the UK anymore. It was like that's the home of Jaguar. Oh boy. Well, they're working on just completely destroying what was left of the Jaguar brand. And didn't the guy? Could somebody verify that? But before he went to Jaguar, didn't he work for Bud Light? Could somebody verify? I don't want to misstate that, but I think I read that somewhere. Could somebody verify that if you're looking to Google something while this live stream's going on and let me know? Oh, you know, yeah, maybe do a little market research. I don't know who's that targeting though, because Jaguars aren't cheap, inexpensive cars. What is that targeting? Who goes and watches that and goes, I want to buy a Jaguar now. I want to spend a lot of money for a car, and because of that ad. Oh, it's I don't want to see that. All right, well, we still got market stuff to go. Sorry I get sidetracked. I know it. I'm sorry, but it's a Friday. Next week's at least a shortened trading week. I'm still on Ninja Trader on Wednesday. I don't know if I'm going to do a live stream on Friday. I just might take it off. I'm definitely not doing one on Thursday. I actually need a couple day break, so we'll see. But I'll let you know next week if I'm going to pop on for a couple minutes Friday. It's shortened trading hours, and it's very thin trading. And there's better things to do than listen to me. It's targeting their ESG rating or whatever. I don't know what. Do we still have ESG readings? Oh, can we just throw out the shareholder versus stakeholder capitalism argument? Because one of them is not real capitalism at all. Oh, I remember when my wife was doing her MBA, and she's like, "What is this crap they're trying to teach about, this ESG and stakeholder capitalism and all?" She's like, "This isn't capitalism at all." She couldn't, and the professor, oh boy, and the students, she couldn't say what she thought because you'll immediately fail the class. So it's just absolutely absurd what they were teaching in business school. Oh, sorry, I got sidetracked again. So, 15 minutes after the cash open, we got the global composite manufacturing and services. Remember, those are small to mid-tier companies. Uh, Really, the only one I'm really paying attention to is what happens with the services number. And then 15 minutes after that, or 30 minutes after the cash open, I'm not even paying that much attention to the consumer sentiment, although it might pop because of the election. That will be interesting. The things I'm watching the most are the inflation expectations. This is the short term, and it's expect to come at 2.6, a little drop from prior 2.7, and the 5-year still expecting to remain elevated above 3%. So that's going to be the numbers I'm really watching. Then we have rig counts. And then, by the way, just peeking into Monday, there is not much going on. And then peeking the rest of the week, remember, Wednesday's big next week. And see, Friday, there's nothing. You get the Fed balance sheet. Yay! But Thursday, again, so next week, that's where we sit. So far, into it, that their earnings were not well received, although it's bouncing back because we're still in the try to buy everything mode. It's getting a little tougher. The market's still buying all the dips, but it's acting very tired. It's going to just take one thing to push it over the ledge from my perspective. One thing. So your mega caps mixed to slightly down this morning. Consumer defensive, little money going in there. Let's just take a look at the groups. So healthcare and consumer defensive. So it's definitely a risk off kind of day. But when you see healthcare and defensive and industrials leading, that's generally a rotation out of riskier assets into some safer assets. Assets and comm services is leading it down. Fed watch tool, just do one more refresh at this, but it was closer to 50-50 yesterday, now climbing back to 60-40. Going to watch how this reacts after the consumer sentiment numbers. But still, this is not definitive that there's going to be another cut. Fear and greed back into greed mode, which is what I was watching for. Schiller P ratio 37.95, almost above 38 again. Sterling, thank you for putting in the earnings, but there was not a lot. Even yesterday, nothing's market moving. And today is absolutely nothing. So we can wrap up that. Now, we were flirting with that 62.5, but could not follow through with the close. So, what do I watch for now? I'm watching for. Now, if we finish the day with a close above 59.79, then that technically shifts the probabilities where we could continue higher, maybe even through next Wednesday. If we don't, I'm watching for, some kind of topping pattern right now. Going into, from yesterday, a little run up, then the consolidation all day long and overnight and making a nice little flag. But it's got to break out. So my resistance area is at 59.79. Does not mean that's the exact stopping point, but that's what I'm keying off of, right around there. Okay? So in any rally, that's what I'm watching. If it gets through there, then here's what I do for, and I don't, personally, I'm not looking to do much today. But above there, this is where I'd use a little reverse harmonics if you were going to be day trader, which I don't recommend for most people. But here's how I'd structure stuff. So you start breaking above that. My key targets would be they're on this 59.90, then 59.96. Those are the little pullback reverse harmonic targets. Now, if we continue and above that 62.5 for next week, then I'm going to use the targets from the 19th, the low that put into this pausing area that made the flag. The prior pausing area, remember, would have been here. So we had this as the prior pausing area that you see here. I'm just doing a little teaching today. I hope you don't mind. See how we went through, we spiked up here. You see this spike on this candle and hit the first harmonic. And there's a prior cluster there. Sold off, went through it, and then topped out. 59.8350 was the next harmonic. The high yesterday was 59.85. Then we pulled back into the flagging pattern. Now, since we have a bigger pausing area on the 4-hour, and this is based off the 4-hour chart, remember, pausing bars on the daily are stronger, but we don't have any pausing bars on the daily. So we need to drop to the 4-hour, which gives us a nice flag pattern. Then if we break above here, besides using those short-term reverse harmonics, which would be for day trading only, the next key targets would be 6,125 to 6,375 on a continued push higher if this follows through, and I'd only be paying attention to those if we do close above the 62.5 today. And then an intermediate target would be 60, 17.50, and then 60.28. And why I personally like to do this is because it helps me come up with my roadmap ahead of time. It helps me come up with my roadmap. Then you can combine other stuff like the breakdown zone. You see here why this is support, especially I do these off the candle bodies. Break, resistance. So this breakdown zone is an area. So maybe, if we start stalling around there, I raise a stop a little earlier and still target this 6,000 area. But now I can come up with a roadmap. Roadmaps are helpful for me, price roadmaps to structure trades, especially for reward to risk ratios, and if I'm doing options to structure option strikes. Or if you're doing, Sterling does a lot of iron condors. This is where it helps me. Let's say I was going to have a targeted condor in here. Well, I could make the center right around this 6,000 area. So that's exactly why I do that. Just trying to explain, because some people don't understand why I do that, but that's why I use these targets. Now, on a pullback level, very, very key. Doesn't mean it has to stop here, but this is the first level we'll be watching. This is 59.54, 59.53. We drop below there. My next key, really strong areas is 59.34 to 59.36. Let's see if there's any more. Reporting back to Jaguar. So when was the guy who did the ad guy, though? When was the ad guy? Yeah, if you've been there 15 years. Just reinforcement of how important the harmonics are. Take a look at the weekly retracements for Gap and Ross from the recent highs. They are both gapping up right to the 62.5. Hey, Stafford, how are you doing, buddy? Haven't seen you on the stream in a bit. I hope you're okay, bud. Lots of vintage Jags of those Woodwind Racing events. Yeah, they don't make them like that anymore. Again, thank you for tuning in. Let's just take a look at that. Let's make this more. Does that make sense what I just covered before I'm going to this last stuff? Today you have the little on the thing yesterday, but this closed above there. Now we have to go to the bigger levels for Gap. The bigger levels. But you use the probabilities. So the very key area, now remember, this could roll over again. 26.42 is key on the 62.5. It's gapping up just below that. Remember also, this is the rollover zone. Well, I want to raise that back in because I'm still, if we do not close above the 62.5, I will still watch for this being the rollover zone going into next week. That's why it's important. It's not a guarantee when it closes above the 62.5, but it shifts the probabilities drastically. And Ross, $153.76, $153.50, right there against very key prior resistance also. So again, I'll still be watching for a potential rollover. What's Ross's? See, it was already traded 21.93. Okay, it missed on revenue. Would I be bidding Ross up like this based off that earnings report? Not in your life. But we live in insane market times. The Nasdaq still stalling out at the first target, so that's still very key resistance. Anywhere about 2861 to 2882 is very key. If we do blow through that, 2963 is the next target. If you're looking for the key pullback level, remember, since the stop raised, it's still 20,578, especially if we close back below there. see, I'm more by the rotation zone kind of guy, so good to hear about targets and risk reward to risk. Again, if I'm going to, whatever the strategy is, I need to have targets and I need to set up my reward to risk. So whether I'm buying the rotation zone, whether I'm doing a percent beat buy, whatever it is, whether I'm doing the rotation back up buy, whether I'm doing a divergence buy or sell, whatever it is, I need to come up with at least what could be suitable targets for me so I can know if I'm potentially structuring the trade correctly. The Dow, again, another flagging pattern. Not as well defined, but I'm sure you can see it here. Trying to get above it, going in the open, flagging pattern, back to the rotation zone, trying to move up, and the Dow did close above the 62.5. So I'll be watching for further upwards price action to at least 44,217 and possibly 44,421. If we look at this, if that does come up there, could we be getting into a minor double top territory? We'll have to see next week. Russell, still in the rollover zone. I was actually surprised at the amount of strength in the Russell yesterday. But we had it was sort of buy everything again. 2,390.7 is the key closing area on the Russell. Support coming in roughly around today's lows, the 23.69 at the 50% harmonic. VIX, cycle tops. It'll be interesting to see if we get some rolling over VIX going into beginning of next week at all. DAX, there's just not a great pattern in here right now. Trading against very key resistance. If it does pop through, there's a little higher, about 19,360. But then above there, the next target would be back to 19,460. The notes, running out of downward momentum in the short term. And remember, we have cycles at the bottom. So we can either see some continuing price action or maybe a slight rally in the notes and a slight pullback in the yields. But the yields got back to cycle bottoms on the daily. And they're still trying to roll over on the weekly. The piece next Wednesday is going to really drive this. So I think it's going to stay in consolidation through next Wednesday morning. Dollar index. We had, besides me clicking like a madman, we had the potential double against the rotation zone, rotating up. Very strong dollar. Breaking above the 50% harmonic. Look at this. We got support all the way back here now. Now the dollar's getting overdone. Something, maybe the GDP or PCE numbers next week. At some point, we're going to need a little pause in this dollar. Now, we'll pause above very key prior resistance before resuming its trend. Because now it's in between the 50 and 62. If it forms a significant top in here, we could see more of a potential pullback. There is nothing forming yet. I'm going to be going into next week, though, especially into next Wednesday, watching to see if we're setting up with significant topping patterns. Other than that, the trend is still up, and the major support areas back at 106.50 to 107. Crude, there's not much here from the percent beat buy. It's really aggressively now trailing out because from my perspective, it's at cycle tops. It's at cycle tops. And this little spike down area is a great area for any remaining trailing from my perspective. Natty gas, we talked about that. Got rejected from that 350 yesterday, but coming back into support. Watch how this reacts next week as it comes into support with the breakout area, the prior breakout area with the rising rotation zone. Okay, that's what I'd recommend with natty gas if you're looking at that. Gold, I'm watching to see how gold closes today. Because, yeah, it's gone on a major tail back to nearly overbought at cycle tops and spiked briefly above the 62.5. But doesn't look like it's going to close above that. So remember, if we don't close above that, I'll be watching for another minor topping pattern for a rollover play, especially next week. And the other metals, look at silver, gone a whole bunch of nowhere with gold. Gold's leading the charge, silver's gone a whole bunch of nowhere. And look at copper. Copper could be forming a little mini double bottom, something to keep in mind. But again, copper pressure is still down. Copper is not confirmed at, or even got double bottom territory. Up to the rotation zone, rotation back down. But copper's gone a whole bunch of nowhere since the original sell-off. So gold's really the only thing that snapped back. Gold's the anomaly here. I think I'm watching. Dark screen. I'm now watching. Remember, yesterday I said it was in trailing. We never triggered that 1 hour double. It's still in trailing from any buys, still watching. Now I will shift to going back to more short-term bullish mode if it can manage to close above 27.04. Right now it's in the major potential rollover zone. I want to point out a couple other things. We don't yen, not much to talk about. You still have the potential double top, but it looks like it's going to try to just consolidate up here. Look at the yields on the 10 years, back all the way up here. A little pullback today, but whew, if those break out, watch out. Spiders, by the way, we had that daily double triggered and ran up, hit the closing below the 62.5 yesterday, but running up and hitting all the targets and then closing below the 62.5. Two separate strategies there, but closing below the 62.5. So still 594.05 for the S&P or the spiders, and also filling the gap. The Qs, which did not have a double, and not able to fill the gap yet, and a little weakness coming in there. Sorry, I got in the teaching mode. Other than that, let's just take a look. Tesla, whole bunch of nowhere, just a sideways consolidation. This is not invalidated the potential double yet. NVIDIA, big spiking up, nearly not invalidating the double. Remember, the level to invalidate the double was 153.28. We hit 152.89 before the pretty substantial reversal yesterday. Now this is getting very lopsided. So I'm going to probably end up, unless something major happens, this will probably never trigger. What else? Please take a look at OKE. Any technical explanation for this blow up momentum other than that this oil and gas pipeline industry has gone nuts? It's just tied. It looks like it's tied to the natural gas demand, but jeez. Nope. Is there any technical explanation? No, it's just a lot of momentum buying. We're back in momentum mode of everybody pouring in everything. There's not even a lot of good pausing areas here. I'd be watching for at least a little short-term top coming in around here, though. That's what I'd be watching for, at least in the short term. Did anybody look at, because Bitcoin, where's my good old Bitcoin? Where'd it go? There it is. There it is. Right. We had 99.050, just slightly above that and pausing there. If we do blow through this area, the next key target is 104,600. But we've now checking off that 100K area. Did anybody look at this MicroStrategy yesterday? Remember I said this would never end well? Look at that bar yesterday. Look at the MicroStrategy bar. That is absolutely a brutal bar. Look at the range of that sucker. High of 543, low of 371. This is insane. This is not even, this is just pure gambling. By the way, if you're trading MicroStrategy And you want to know this would be a key thing to watch for secondary reaction, because if it can't get above 478.82, watch out when you have this kind of pattern. Google. This is sort of interesting. That's an ugly double, but definitely triggered. Still catching on the 200. But at this point, this being the most recent pattern, if it breaks below that 200, we could easily test. Remember, this was an incredibly sloppy inverse head and shoulders. Couldn't even get to the second target. It's technically still not invalidated, I don't think. No. But if this does break down, you can see a definite return to these September lows. SMH. There's just, I was looking at this the other day, and there is, the semiconductors are definitely weakening. Besides NVIDIA, semis have not been able to regain their summer leadership when they set up the double top. They're grinding here, but just keep an eye. Keep an eye if it really starts losing this 200 again. Let's take a look at that weekly. Because overall, I mean, based off the weekly pattern, I'd be watching for rollover plays in this sucker. It came back down to prior major support setting in April with the April lows, reconfirming on that the August 5th, the magic August 5th day, but that was between the 50 and 62.5. If this starts really breaking down below this about two, let me fine tune that. Yeah, about this 235 area, watch out. Watch out in the semis. That can be a good leading indicator possibly to where the NASDAQ's headed. Well, also, you have, even if you take their Bitcoin holdings in, which they're issuing debt and convertibles to buy more Bitcoin. I mean, this is just a pure Bitcoin play at this point, but you're paying, why not just buy Bitcoin? Because you were paying at one point a 30% premium, and it's turned into just a pure Bitcoin play. This is going to end in tears. It's going to end in tears at some point. Thank you for that. All right. Taking a look. Short term, there's again this very significant resistance up here. Keep an eye on that. Let's just see where the tick opened. It's all going to depend on those numbers that are coming out at especially 9 a.m. Halfway decent tick opening. So we're going to be watching to see if the market holds with the tick pullback and then makes a run at that very significant resistance area. Other than that, not much to talk about. Here's your tick. Here's the tick pullback and the little S&P pullback. So I'm going to be watching going in. Remember, 7 minutes we got the S&P composite manufacturing and services numbers, and then at 15 minutes after that we have the consumer sentiment and inflation expectations, the final numbers for November, and then that's pretty much going to determine most things for the rest of the day. You are welcome, Richard. I will see everyone back on Monday. Hope everyone has a pleasant weekend, the last weekend before Thanksgiving. And I will talk to everyone later. Bye for now.